Hi guys, welcome back to Finpact. Today we're taking a look at some of 2022's fastest growing brands that could be set to explode in 2023. Now, despite the situation we've seen this year with high inflation, rising interest rates, some brands have still managed to lift off despite the threat of an ever-present recession. In fact, one of the things I always like to reiterate is that when brands and companies are able to stay resilient despite market turmoil and the macroeconomics being against them, that's when you know that brand can withstand good times and bad times. Now, if you take a look at some of the most established companies over the last 10 years, companies like Amazon, Apple have consistently shown us returns. Yes, some years they have delivered lower than expected revenues, but they have been investing in their growth and in their R&D and becoming a well-established market player in whatever industry they are in. Now, I know 2022 has been a bit of a contraction year. We've seen bear market after bear market, not just in the crypto markets, but also in the stock markets, particularly in the tech stocks. And with consumer prices rising and cost of living also increasing, now when people have less disposable income, it's pretty self-explanatory that they're not able to spend as much as they would like on goods and services provided by businesses. This is also the same for businesses, as they have less revenue coming in and less funds to basically fund their operations. But despite this, there have still been some success stories of 2022. These companies haven't just managed to thrive, but they've also managed to survive, which I think is equally as important. So in this video, I want to go through 3 companies that I think are set to explode in 2023. These 3 companies that I've selected come from a list produced by Morning Consult on the fastest growing brands of 2022. Now, before I jump into this list, I want to say that this is not financial advice. These are purely my opinions, and this content is for entertainment purposes only. Make sure you do your own research before you invest in anything. I also want to show you guys some good news happening with inflation. As you guys know, in 2022, the Federal Reserve and lots of central banks across the world have increased interest rates to help curb inflation. Now, this takes time for this to propagate into the economy where we see reduced inflation. Well, on recent news, as you can see, Spanish inflation has slowed more than expected to 5.8%. So it seems like rising interest rates have been working in some countries. So hopefully other countries can also follow suit. I also want to reiterate that 2022 has been one of the hardest years. As you can see in the US stock market overview, a lot of the prices across the major indices, so the Nasdaq 100, the S&P 500 and the Dow Jones, have been majorly subdued to points that were almost at pre-pandemic levels. Now, I've always said when you see such dips, it tends to be the time you can get the cheapest prices, especially if you pick fundamentally good stocks. So without further ado, let's look at the first stock. The first stock is Meta Platforms, formerly known as Facebook. Its ticker is META, and the current price is sitting at $118.80. As you can see, analysts in the financial sector have given it a moderate buy rating. This is based on 38 ratings, out of which 27 are a buy, 8 are a hold, and only 3 are a sell. The price target for Meta Platforms is expected to be 148.12 cents, which is a 24.68% upside. Now, I know Meta Platforms stock is down 64.48% in the year-to-date chart, but Meta Platforms, in my opinion, has made a lot of innovative changes. It's rebranded itself to a metaverse-focused business. It still is a very popular social media platform, but with the rise of the metaverse and so many people looking into virtual reality and using it as a means to connect with friends, play games, visit new countries, Meta Platforms also owns Oculus Quest, which, by the way, I do have one and it's so much fun to use. And on top of that, it's also important to note that Meta Platforms laid off around 11,000 employees. That was around 13% of its staff. Now, this isn't necessarily a bad thing. Maybe for the employees it might have been, but Meta's brand is still growing. So in times of economic turmoil, it's not necessarily a bad thing when you have to be financially disciplined. Now, the second company is one that you probably did not expect on the list, and that is Crocs. The ticker is CROX. As many of you guys know, Crocs is a footwear company. I'm not gonna lie, I wouldn't be caught dead wearing Crocs, but I know a lot of people are, so I've got to include it. And as you know, on this channel, I'm very much focused on the stock's performance potential rather than the ugly footwear that it sells. Now, you know what's crazy? I personally don't get it, but Crocs has been the #2 fastest growing brand in 2022. I know the shoes look a bit funny and they're not my thing, as I've made very clear, but some people love them. Some people are really loyal to the brand. And I'm also all about whatever floats your boat. Millennials and Gen Z are definitely driving forward the importance of self-expression and creativity. So Morning Consult actually reported that those who say they pride themselves on their creativity tend to show higher purchasing consideration for Crocs. Now, just taking a look at the current price for the CROX stock, it's $107.60. The analyst rating consensus is a moderate buy with 3 buy ratings and 2 a hold, and the price target, however, is a slight downside. This is what analysts believe could be the case for the next 12 months. However, I'd like to add that it is a fast growing brand. So many times there is a lag. When you're fast growing, you see a slight time delay until it translates into revenues and profits, and then eventually in the stock price. Also, we are in a bit of a recession right now, which is why I think the price has been subdued, but it definitely is one to watch for 2023. The Crocs stock is down 18.48% year to date. But also it's got a trailing 12-month PE ratio of around 10.6 times. So it does look that it could score big time when it comes to revenues in 2023. The third stock is Adobe, and its ticker is ADBE. Adobe is a diversified software business brand, and many people think it still has potential to continue to grow. The thing is, a lot of people are loyal to Adobe. I mean, I use it for my PDFs. Adobe is second on the list on Morning Consult's fastest growing brands list. And what is actually apparent is that creative design software users actually use and continue to trust Adobe to give them reliable and useful apps and programs. Now, truth be told, Adobe has not had a very easy year. They've actually faced quite a lot of resistance from regulators because they wanted to acquire rival software company Figma. Now, the thing is, if this deal does go through, then Adobe will be able to gain control of its niche market even more so. And in that case, if the acquisition does go through, then they can make some recoveries in the stock price, which has been down around 40% this year. Now, the current price for Adobe stock is $334.04, and the analyst rating consensus is a moderate buy. This one is quite mixed across the board. 7 are a buy, 12 are a hold, and 0 are a sell. And then when it comes to the price target for the next 12 months forecast, it's $384.24, which is a 15.04% upside from where we're at. This is an average of all the ratings provided by the Wall Street analysts. In this case, there are 19 Wall Street analysts offering this 12-month price target for the Adobe stock. So guys, what do you think of these 3 fast-growing brands for 2023? Are you guys bullish on them? Do you have any other stocks that you've got your eye on? If so, leave them in the comments below. I hope you guys enjoyed this video, and if you did, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when I release a video, as a lot of the information is time sensitive. I'll see you guys in the next video. Bye!